All right. All right, guys. Welcome again. Today is the 21st of June, 2024, and I wanted to take this opportunity to go over how we did this weekend, this past week, and also a couple of things that are shaping up in the market, especially around Swiss franc and euro, and why we think it's a very important development that's actually is taking place in the market, and also toward in the second half of our the session, I want to cover order management concepts as to why it's so important to understand what happens after you take an order. Yes, it'll hit a TP or it'll hit SL, but that's not the end of the story. At Edge-Forex, we take it a step further. We have a very intelligent order management system that we have put in place that gives us the edge over everything else. So if you guys want to know what's our edge at Edge-Forex, our order management is our edge at Edge-Forex. So today you're going to learn exactly how we approach our order management and why it sets us apart from absolutely everybody in the industry, and how we actually again, you'll see what I'm talking about when I start discussing it, because it's gold. It's really really good. So let's look at the numbers on for our week. And the reason I am going over everything, because I'm recording this and I'm going to put this up on our Telegram channel for folks who cannot join us on a real time basis on a live call. They can actually listen to it and send us questions or feedback on or through a message. And I'm also going to put this on our YouTube channel just to get the word out and just to show who cannot, because this Friday evening is not very easy for everybody to actually join in. So that said, so we had an amazing week. We had almost 600 pips. If you had a starting lot of zero point zero 0.01, you would have made 158 bucks. Or if you had an account size of say 10,000 and your starting lot was 0.10, you would have made over almost 1,600 euros for the week. And also, just to give you guys a little peek into our Road to a Million, which is our 60 grand account that we started a couple of weeks ago, just to show you guys how that is doing, just for information. So let's look at it, that how that account is doing. All right. So here we started with 60,000, and over the last couple of weeks, we are able to generate over 2,400 pips. That's amazing. So, and we are have a profit factor of over 9. Again, this is unrealistic to maintain in the long term, that kind of profit factor. So the profit factor of anything, say 182 or above, is really really good in the long term. I'm talking say a year, 2, 3, 4 years in trading, and if you're able to maintain a profit factor of over 2, you're doing absolutely amazing. And again, here we are looking at a risk reward ratio of 8.76. Again, it's not maintainable in the long term, but in the short term, yes, it looks amazing. So let's look at how Edge-Forex account is doing. Okay, so for Edge-Forex, we can see here we have again a profit factor I was telling you. So that's more realistic in the long term, 2.20. It's absolutely amazing. It's really, really good. And a risk reward ratio of 3.67. That is also very good. So for every dollar or every euro that we risk, we gained 3.67 back. So again, it's unprecedented. Nobody in the industry can show you this, especially when they are running their strategy for over 1,200 days straight. And we are not expecting this to change in as far as the results are concerned, because of the order management and all the logic that we employ in our strategy. Again, we are going to discuss what those things are in order management later in today's call. So stick around, it's going to be absolutely amazing. So again, the total pips that we have generated in our main strategy is over 45,000 pips. So all that said, it is live for over 3 years now. We have had over 5,000 trades that we have taken. So our strategy has gone through all the ups and downs in the market: COVID, Russian war, economic collapse in Europe, So it has seen everything. So, and we have back tested it from the year 2000. So even if we were to run our strategy in the great financial crisis of 2007, 2008, the housing crisis, our strategy would have sailed right through it. So everything that has happened in the past quarter century, our strategy at Edge-Forex would have handled it perfectly fine. All right. That said, so we had an amazing week. Last week we had a negative pips because we had to hit a couple of stop loss orders. Now this week has been amazing. So out of the 24, 25 weeks, we had one negative week. All the rest were absolutely positive, 100% positive. All right, guys. So let's move forward. So what's next on the agenda is Swiss franc. So why is Swiss franc so strong lately? So Swiss franc in itself, yes, it is gaining strength. But if you really look at it in isolation, it's not, because Swiss franc is falling against everything hard. For example, Swiss franc is falling against gold. Swiss franc is falling against silver. Swiss franc is falling against copper. But what is Swiss franc gaining against? It is gaining against all the relative currencies. For example, Canadian dollar is gaining against Australian dollar, is gaining against US dollar. So again, we need to look at it in a relative manner. So Swiss franc right now is a safe haven asset or a safe haven currency that is attracting a lot of attention from the Eurozone. So because there is so much political turmoil, so I'm kind of mixing Euro analysis in this as well. So there's so much political turmoil in the Eurozone. All that money that is coming out of Euro is flowing into mostly into Swiss and US dollar. So you will see that Euro is getting weakened against the Swiss franc, which is the EUR CHF, and is also getting weakened against the US dollar, which is EUR USD. So there is political turmoil today. A lot of negative PMI numbers came out in Euro, further weakening the Euro against all the other currencies. So again, currencies are relative. So just because I'm saying Swiss is also weakening, but is not weakening at the rate Euro is. So it's all relative. It's like imagine two cars reversing, but one car is reversing faster than the other. So if you're in the car that is reversing faster, the car that is reversing slower, it'll look like is going forward. So, but if you look at from a distance, both the cars are reversing. It's just that they're reversing at a different rate. So that is exactly what's happening with all the currencies. So both the Swiss franc, US dollar, euro, they're all falling, but at a different rate. So if you can get that concept in your head, you have 90% of it made. So now, why is euro weakening? Again, I said there's a lot of political turmoil in Europe. There are a lot of negative numbers. And more than that, both the Swiss franc central bank and the European Central Bank, they have decided to drop interest rates. What they want to do is they want to prop up their economy. They want to prop up their the jobs. For that, they have decided to drop their rates. In Swiss's case, from 1.50 down to 1.25. What does that tell me? That tells me that even though the inflation is high and it's not weakening, it is going to get even worse. And who is not cutting rates is the US Fed. So in the US dollar, the rates are not being cut. But on the Swiss side and on the European side, they're cutting the rates, weakening their currencies. So that is a very clear signal to me that in the coming weeks and months, I'm not talking next few days, I'm talking in the coming weeks and months, US dollar is going to get stronger. Euro is going to get further weakened because we are only expecting one rate cut. In reality, I'm not even expecting that personally. But we are expecting one rate cut for the rest of the year. So that's more than 6 months. We are expecting one rate cut on the US side, but on the Swiss franc and euro side, we are expecting another 2 to 3 rate cuts. So again, money flows where it treated the best. Right now, the best treatment for money and for currencies is on the US dollar side because it's giving the most interest rate or the most amount of interest after inflation compared to all the major currencies, including British pound, including Swiss, euro, CAD, Australian dollar, New Zealand dollar, all the major currencies in the world. So that is the ongoing theme and underlying theme in the market. So all the safe haven currencies are getting a bid. Right now, stock markets are overextended like crazy. Absolutely. So all the smart money is actually moving out of markets, is going into US dollar, is going into Swiss franc, is going into precious metals. Even gold and silver are taking a hit. I think it's on a very short term basis. And gold is forming a bottom right now. We'll do an analysis on another day, but gold is forming a bottom and it's about to shoot for the next leg up. Again, not a topic for today. So that said, coming back to our euro weakening. So I hope you understand why the euro is weakening, why Swiss is also weakening, but not at that pace. But it seems like Swiss is strengthening because it is attracting a lot of money from as a safe haven because of the stock markets, because they are so overheated. And if you have noticed, even stocks like Nvidia are starting to take a beating a little bit. And I think it may be the turning point in the short to medium term. All right. So now let's get to our order management concepts and why today's session is so important and why order management, in my opinion, is even more important than the actual entry getting into an order. Like over the last few weeks, I have gone over our logic and concept as to what are the rules that we follow to get into the market. So the first rule is that we identify an uptrend or a downtrend, the trend that has extended. So what does that mean? So the RSI reading is say above 70 and it's really extended. So it's overbought or oversold. The next we look at is, I'm just doing a refresher. The next we look at is if there is a divergence. Okay, so that's the step number 3, the divergence. Step number 4, has a turn taken place. So now the price is overstretched. Now the divergence has taken place. Divergence, what is divergence? Divergence is where the momentum indicator is turning on around, but the price is still going in the same direction. So the divergence has taken place. Now the third is the price also then taking a turnaround and agreeing with the divergence with the momentum indicator and turns around. And then the final is the actual confirmation that yes, finally the price has turned around and all indicators are saying that yes, there's a reversal actually is in place. That's when we go in to our trade, buy or sell. So now we have placed the trade. Okay, so now we place a TP in our heads, in our system, saying that hey, 30 pips. If it moves in our direction, we go 30 pips and we're happy to hit our TP. Everybody's happy. We close our trade. We look for the next one. Now, what happens if the trade does not go in our direction? That's where one of two things would come into place. Now, if a trade doesn't go into our direction and then it is very violent and severe, we take a stop loss and we are out. So it goes again. So we go into trade, we're expecting to go in one direction 30, 40, 50 pips, and it goes the opposite direction 30, 40, 50 pips. We don't want to fight it, we're out. But what happens when a trade is not going in our direction, but it's not gone too far away from our direction, and we get another signal based on our rules that we use to enter in the first trade, and we get another signal saying that the same exact scenario has taken place in the market, same entry signal has come again while one order is open for another order, but at a lower price. So the first order right now, maybe say 15, 20 pips in the loss. I'm going to show you an example. But now the market has given you another signal that, hey, time to get in again. So in other words, what do you do then? What we do in our case is we open another order. So now instead of one order, we have two orders. So now we have two orders based on the exact same entry rules, but a few pips from each other. So now our probability, so our first probability of winning was 80%. Now second order probability has winning percentage of 80%. So now that gives us that a combination of those two orders will end up in profit of, or the probabilities of over 95%. So now we take that order again. So now we have two orders. So now what happens is when the second order that we took, which was at a lower price, now I'm talking about order management, okay guys? This is not, we only have one order. This is talking order management. Now, if the second order hits the price of the first order entry, so now we have one order in profit and we have the second order, the original order, at a break even. What we do at that point is we get out of the market. So now with the combination of the two orders, we don't care how many pips we made. We may have made 10 pips, 20 pips, 30, 50, 40, 50. Why we want to get out of the market? Because we want to have our exposure to the minimum. Because we have open two orders, we want to get out of there. So now let's see how it works in reality, in practical. So now here you're looking at the first order. So we get a signal out saying trade alert, hello, hello, open by USD CHF at 0.8943.01 lot. And it's very important, keep an eye out on the order ID, 380, ending with 380. Okay, guys? So now the order we place at the 380 order we place at 8943. Now the price moves against us. Now price move against us now is fallen from say 8943 to 8919. Now it's fallen 20 pips. It's not enough for us to take a stop loss or hit a stop loss, but it's created another opportunity to enter in the market another time. And what we do is we open another order. So now we have two opened orders, 380 and 233. Okay, so now keep in mind that our original opening price was 8943. So now we hit, so the price rebounds and it reaches the 8943 price. So it actually exceeds it, 8944. So we open it at 8943. Now it's reached 8944. And what we do is we close the order 233 here, close by, and we close the order 380 at 844. So 8944. Okay, so now and then we show you guys at the end what we did. We show you guys in our report that hey, our first order was open, which is the 380 at 944, and the 233 order was opened at 8919, and they were both closed at 8944. And for the order that was opened below, or the latest order, made a profit of 2.55, and the order that was opened earlier made a profit of 2 cents. So as a combination, we made a profit of 2.57 for the combination of those two orders. So what we have done is the price is still where we opened the original order, but we have grabbed a profit of $2.50 by opening another order using the same logic, but the price has not gone anywhere. So that is the power of order management that we employ in our strategy that enables us to work with orders and to get out of market even though the price is not going as we predicted a lot of times, and sometimes actually. So a lot of times, I would say vast majority of our orders are single orders that where we project the price is going to go a certain direction, that's where it goes. But 20-30% of our orders, 20% I would say, 15 to 20% are circumstances where, or especially when the markets are going sideways, sometimes the prices do not go the way you predict. So instead of hitting a stop loss, and yes, we do want to hit stop loss at a certain point. But again, if there is another signal and there's another circumstance in the market where we can take advantage that is not too far away from the price of the original order, we open another order, but it has to follow our same exact strict rules of entry to get in. So now we, instead of one orders, we have two orders. As soon as we have a break even for the original one, we get out on both the orders and book our profit. So that enables us. So these are like, it may seem very straightforward, but it took us a lot of time to come up with this strategy, to come up with this logic on how to manage particular orders. So now, later, next time, I would like to discuss what happens after the second order if the price keeps going against us. How do you manage that? So I'm gonna discuss that maybe later or maybe today if you guys want me to. So, but I want to open it up for you guys. Ro, Danny, welcome guys. So did that? Just give me a feedback of what I explained, if that made any sense, or if you want me to clarify further, or if you have any questions or any concerns. Just opening it up. So, any questions? First of all, did it make any sense what I just explained? Yes, Danny, go ahead. Welcome.
Hi. I just wanted to make sure, well, for each of these positions, you'll be opening for 0.01 lots?
Yes, for the initial order. See, now what has happened is the market has moved against us. It's only a few pips away. So for the initial one, that hey, we want to capture a few pips and we want to get out of the market, we open 0.01 lots. Yes. Now things get a little bit more complicated when then the market moves against us again after opening the second order. So now, if the second order is open and market moves against us, that's when we calculate, okay, are we going to open, what is the order size that we are going to open?
Okay, and does that work the same in the case of, sometimes I see that you put like 0.02 lots?
Yes. So now,
And does that mean it's half of the stop loss, or is it the same? Is it the same number of stop loss? Like when you use 0.02 lots,
yeah. So when we
does
do,
that mean it's half of the stop loss?
no, stop loss is not in the picture right now. 0.02 will close when the price hits the same as 0.01. So that's the TP of the order.
Oh, right, I get it.
Got it?
Thank you.
Yeah. Okay. So again, what I want you to understand is we will get to those complex scenarios next time. But what I want you guys to understand is this particular one only when there are two orders. Okay. So now, for example, we have entered in the order. We have not hit our stop loss. Okay. What do we do then? Between hitting our stop loss and our order, price is against us, but we get another entry signal. Now we open another order and then we ride it till we hit our first order, break even, and we get out. Because this way we are never going to lose money in this particular scenario. And then we may not make a lot of money, but hey, prices are going against us. It's not agreeing with our prediction. I would rather get out. So that's what we do. So now, what happens if it keeps falling? We will discuss that. But I just want to make sure that this particular concept is actually clear.
I have another question. Do you recommend us to use like a fixed stop loss, or should we just let it float until
No,
you
at
tell us
this particular time, we will talk about stop loss, and in this particular case, you want to see based depending on what is your order size, starting order size, and how much is your account balance and equity that is in place available at the time. Because at any given point, you don't want to go over 2-3% exposure on your total equity. So based on that, either you hit 2% or 3%, whatever your threshold is of your equity, you have a hard stop loss. Or what you want to do is then if there is another signal, then you want to open 0.02. And then you want to TP on the 0.02 at the second order that you opened, which was a 0.01. Got it?
All right, I get it now.
Yeah.
Thank you.
Yeah. So next time I'm going to show you guys doing a back test and show you guys in MT4. I'll try to do my best and show you how exactly works in reality on MT4 terminal. All right. So how about you, Ro? Is it making sense or is it a bit complicated? Hi, Ro, you there? No. Okay. Yeah. Okay, so that's what I wanted to show you guys today. So next time I want to take it to the next level and show you guys how what to do and how we manage things then if prices even go further away. So now, here is an interesting scenario. And what if in this case, now while I have two orders open and price is going towards my direction, which is buy, and a situation happens when I get a sell signal based on our, because we may have a big distance between order one and order two, and now a price is catching up. A price is starting to climb from order one to order two, and in the meantime, I get a sell signal. What do you think I should do? What we do is we actually take a sell order. So not only that hedges my total orders as to what my exposure is, it also lets me capture the downsides, if any. Okay, so I will show you guys next time. So there are so many different scenarios to keep in mind to make sure that we are making sure that we take every scenario possible into account when we are designing a strategy, when we are backtesting a strategy under all circumstances. So these are just a couple of different scenarios that I told you guys, but there are so many different combinations, and I want to show you guys. I want to show everybody that as a company, as traders, at our developing our strategy, we have gone over everything, and I'll show you guys how much work has gone into these strategies for backtesting, for designing, and then all these years of work has brought forward this particular strategy that has gone live, and that has made us so much money. This is our bread and butter. Um, so yeah, so that's where our motto is. We want to be open with you guys. We want to be open to our traders in everything that we do, because that is why we are coming out with our new platform. And by the way, guys, we are making some real good progress when it comes to creation of the new platform. And in another, I would say, 10 days or so, we should be rolling out the beta version of it, and just to get the feedback from you guys, to see how it looks. Because now the key is, instead of just giving you guys signals on our Telegram channel, is going to be an interactive, discussion based platform that is going to allow you not only to ask questions to us, but also have discussions with other traders. So we're running a lot of ads on social media. We're running a lot of ads on different platforms to raise awareness of this particular platform that we are actually building and we are designing. So I'm really, really excited on launching this Road to a Million Club in another couple of weeks. So, and I'm going to be sharing everything that we do here, that we discuss here on our Telegram channel and on YouTube, just to spread the word that we are an open book. We show you guys exactly our strategy, what it is that we follow, and show you guys what differentiates us from people like Baby Pips or people like forexsignals.com or any other service provider that is out there. So again, like, guys, the only way you are going to learn is by practicing how to trade, by taking these trades along with us and scrutinizing and asking the questions as to why is it that we took a certain position and what was our logic or reasoning behind, taking stop loss or behind adding a position or taking a hedge. Because we have gone through this practice for years and years and years, and it's now for you guys to learn along with us exactly with us. You don't have to learn um, technical analysis A to Z. Like, you just have to learn what works. We've already done the hard work for you guys. We're going to show you what works. You make it work for you guys and then tweak it and make it your own. So again, I was talking about USD CHF. Let's quickly look at the chart and see how it actually looks on the chart. So now this is USD CHF, the Swiss Franc, and this is a 4-hour chart. So if you look at this chart from left to right, you can easily tell the price is falling. That means Swiss franc is actually getting stronger compared to US dollar. But the chart is also telling me something else. So let's create something let me create it and you'll see what I'm talking about. I'm sure you guys know what it means by head and shoulders pattern. So let me draw it out here. So here is the left shoulder, here's the head, here is the right shoulder. So this is the head and shoulder pattern. What happens in the head and shoulder pattern is when the shoulder line, so this line here is the shoulder line. So when the shoulder line is broken, that means the price will take a drive down, and just like it did in this case. So it took from here, which is 89, so it took about 100 pips. So that was a 100 pip trade if you were following a 4-hour chart and you were following this closely like we were. And now, inversely, what's happening now again is forming an inverse head and shoulder. So this is the actual head and shoulder. Now it's forming an inverse head and shoulder. Oops. Let me draw it again. I made a mistake. So that's the left shoulder. This is the head. Right shoulder. Okay. So now price has already broken out. So here, see? So this is a shoulder line that I'm drawing. Price has already broken out. So this tells me that price has actually reversed and now it's broken out from the inverse head and shoulder line, and it's about to move higher. I hope I'm not making it too complicated. It's a very simple concept, head and shoulders. Donnie, like, does that make sense? Okay. So any questions, anything you would like me to clarify? So that's very, very simple analysis that I put forward. And how...
Hi, sorry.
Yeah. So did that make sense?
Yes, so now we should be looking for it to go all the way to...
I'm the first, if I were to place a trade, the first would be the top of the head. That would be around 89, around 90. That's what I would be looking to. That would be my first target. So
All right.
yeah.
So would you recommend us like to open this long-term position?
Yeah, your call. Your call. I just showed you guys how what the market is telling me right now. But the only positions that I recommend that we said, hey, go in, are the positions that we take. Right. Currently we are taking the position that we have already advertised or already shown on our channel. As a company, as Edge-Forex, even though I may have taken some personal positions around here, but as Edge-Forex, we only take positions that we send our signals for. So if you're asking as a person, yeah, I may have taken a couple of positions, but as Edge-Forex, no, I cannot recommend as a company. Because as Edge-Forex, I can only show you guys, hey, take the positions that we are taking on our Edge-Forex account, which is the positions that we take on our Telegram channel that we advertise, which are right here.
All right, yeah, I get it. So in this case, if I wanted to open a position, would it be like 0.01 as well?
It is, depending on your account size. For every 1,000, I would open like a 0.01. Yeah.
All right, thank you.
Yeah. Okay. So I think that's it for now, and I would really like to thank you guys for joining, and I'm going to put the entire session up on our Telegram channel for folks who couldn't join in time, and I'm also going to put it on our social media platforms for folks to get in and view and see what our thought process is and how we do things and look at our results and everything else that I covered. That said, I would like to wish you guys a very good weekend, and I will talk to you soon. All right, guys? Thank you. Whew.